Welcome to our European olive oil market update. Today we'll examine the current challenges and forecasts for this vital industry. The European olive oil market finds itself in a precarious position following the April 9th U.S. tariff enactment. On the same day, President Trump announced a 90-day pause to allow room for negotiations, creating a reprieve but not relief. Significant uncertainty persists throughout the European market despite this temporary pause. The Spanish market is particularly tense as it supplies approximately two-thirds of U.S. olive oil imports, putting billions in export value at risk. Overall, the market is characterized by relative price stability, but with notably low demand. Stakeholders across the supply chain are navigating this complex trade environment cautiously, with many adopting a wait-and-see approach before making significant moves. In Spain, producers and exporters are worried about losing key U.S. clients they have spent years developing relationships with. Many negotiations have stalled due to the uncertainty, with buyers hesitant to commit while tariff questions remain unresolved. Greece presents a fascinating market division. Few are willing to sell, leading to nearly frozen export activity. Mills are struggling as producers refuse to release quantities at current prices, while traders who secured early stocks are now seeking buyers aligned with today's price levels. Tunisia faces even higher tariffs than European countries, intensifying concerns among stakeholders who are already operating on tight margins. This could significantly reshape Tunisia's export strategy in the coming months. All regions are experiencing a cautious market approach while awaiting developments after the Easter holiday period. There's a collective effort to prevent market confidence collapse, with many hoping the post-Easter period will bring more clarity and action. The olive oil production season is coming to a close with commercial outputs approaching 120,000 tons. The market is eagerly awaiting the release of March AICA data, which will provide critical insights into final production volumes. April marks the beginning of the critical olive tree flowering season, which extends through May. This period is vital for determining the potential of the 2025-26 harvest. Early signs are generating cautious optimism, especially among Spanish growers. Current weather conditions are being closely monitored, as favorable developments could enhance flowering and fruit set. Positive outlooks in this area may help stabilize prices and prevent further declines. Despite general market stabilization, high-quality extra virgin olive oil remains in notably short supply. This limited availability continues to support higher price points in premium segments where quality-conscious consumers show less price sensitivity. The European Commission forecasts a 7% increase in olive oil consumption for the 2024-25 season, a notable reversal following a substantial 22% decline over recent years when high prices drove consumers to alternatives. This consumption uptick complicates projections for carryover stock levels heading into next season. If production doesn't increase proportionally, we could see supplies tighten by year's end. Meanwhile, demand for the high-quality extra virgin olive oil continues to exceed current supply. This consistent demand is supporting higher price points, particularly in Spain, where premium olive oil remains a sought-after commodity despite broader market pressures. The Easter holiday temporarily slowed trading activity across traditional producing countries. However, as operations resume post-holiday, we expect market dynamics to clarify. Spanish conventional extra virgin olive oil prices are expected to increase slightly before and after Easter. Trading activity will likely remain moderate as the market digests projections of improved harvest volumes for the upcoming season. Italian prices are maintaining stability at elevated levels of approximately 9.25 euros per kilogram. This reflects continued supply constraints and persistent buyer interest in Italian products. Greek prices are stabilizing at levels lower than in recent months. Some producers are becoming more willing to sell to meet financial needs ahead of the new season, although significant volumes still remain unsold in mills. Tunisia is positioning itself as an alternative source with competitive pricing, around 3.85 euros per kilogram for conventional and 4.10 euros for organic extra virgin olive oil. This competitive stance could attract cost-conscious buyers and influence broader European market dynamics. Thank you for watching our European olive oil market update.